In this session we are going to expand on our knowledge of variances and start breaking the material usage variance down further into material mix and material yield variances. We are going to calculate the variances and identify potential reasons for them, as well as defining what the variances are. Before we start looking at these new variances, let's briefly remind ourselves of the different material variances that can be calculated. The main variances that we would ordinarily see are the material price and material usage variances. The price variance, as the name suggests, tells us whether we have spent more or less than planned on the material we have bought and used within the production process, whilst the usage variance tells us whether we have used more or less than planned. We always compare actual costs and usage with the standard costs and usage to calculate these figures. As already highlighted, we are now going to take the material usage variance and break it down into a material mix and a material yield variance. In simple terms, the material mix variance will give us more information on the financial impact of the cost of using different proportions or mixes of materials, and the yield variance measures the impact of the different materials on the output, or yield, from using those materials. There is clearly a balance to be achieved with these two variances to ensure that the cost of the material being used is balanced with the efficiency of the materials being used. Let's now look at the material mix variance in more detail. The formula we are going to use to calculate this is the actual quantity used multiplied by the actual mix minus the actual quantity used multiplied by the standard mix. The net of these is then multiplied by the standard cost. We can turn this into what we did use minus what we would have used according to the standard mix. Again, the net figure is multiplied by the standard cost. We need to perform this calculation for each material in the mix and then total them together to find the total material mix variance. So let's look at a quick example to see this in action. A product is made using two materials, A and B. The standard cost card for the product shows that the standard mix is 2 kg of A costing $5 per kilogram and 4 kg of B costing $8 per kilogram. The standard mix is therefore 2 A's to 4 B's. During the month of November, 100 units of the product were made, using 250 kg of A and 370 kg of B. If we put this information into a table, we can calculate the mix variances for A and B, and therefore the overall material mix variance for making the 100 units of product. In the case of A, we actually used 250 kg, and for B we actually used 370 kg. In total, we therefore used 620 kg of material. Applying the standard mix of 2 to 4 to this 620 kg, we can work out what the quantity of A and B should have been based on the standard mix. The total material used still needs to total 620 kg. So using the 2 to 4 ratio, this gives us 206 kg for A and 414 kg for B. Comparing these figures to the actual usage, we can see that we have used 44 kg more of A and 44 kg less of B than the standard mix. Notice that these differences cancel each other out. This will always be the case given that we have applied the standard mix to the total actual usage. Where usage of one material goes up, the other must go down. Otherwise, the total standard usage won't match the total actual usage. We now need to multiply these differences by the standard cost for A of $5 per kilogram and for B of $8 per kilogram. This gives us an adverse variance of $220 for material A, as we have used more than the standard mix quantity, and a favourable variance of $352 for material B, as we have used less than the standard mix quantity. The overall material mix variance is therefore $132 favourable. It is a favourable overall variance as we have used less of the more expensive material and more of the cheaper material, and therefore the overall cost is lower than what we would have expected if the mix of materials had followed the standard mix. Moving on to the material yield variance. As already covered, this tells us whether the output we have achieved with the materials that have been put into the process is more or less than the standard output. The formula we are going to use this time is the actual quantity per the standard mix minus the standard quantity multiplied by the standard mix. The net figure is then, as before, multiplied by the standard cost. Or alternatively, what we actually used according to the standard mix minus what we should have used per the standard mix multiplied by the standard cost. Notice that the first part of this calculation is the same figure as was used in the material mix variance. Let's use the same example as for the material mix variance to see this in action. As a quick reminder, here are the standard costs and actual usage as per the previous slide. We need to put together a similar table to the one we used for the material mix variance, but this time of course we will be comparing slightly different figures. In the first column we are going to re-input the data that we used in the material mix calculations. So the standard mix based on the total usage of 620 kilograms. This is the 206 kilograms of A and 414 kilograms of B calculated using the 2 to 4 standard mix. In the next column along we need to work out what we should have used to make the 100 units that we have made. Remember, each unit is expected to use 2 kilograms of A and 4 kilograms of B. So we should have used 200 kilograms of A and 400 kilograms of B to make 100 units. This gives rise to a difference of 6 kilograms for A and 14 kilograms for B. In both cases we have used more than expected, so the variances will be adverse. Multiplying these material volumes by their standard cost gives us a $30 adverse variance for material A and a $112 adverse variance for material B, and an overall yield variance of $142 adverse. This adverse yield variance may well have come about because we have used a different mix compared to the expected mix, resulting in us using more of the cheaper material. The lower cost of material A might suggest that the material is of a lower quality than material B, and that there may have been more wastage and extra time spent on reworking products due to the lower quality materials. This will result in the output volumes being lower than expected based on the volume of material that has been input, and therefore yield will decrease. Cost and quality are key considerations and need to be balanced when determining the mix of materials to use, and these are highlighted through the mix and yield variances. The variances therefore provide management with useful information that will help them determine the best mix for the production process and for the business. As already mentioned, combining the material mix and material yield variances together gives us the material usage variance. So for completeness and to prove this point, let's now calculate the material usage variance using the numbers in our example. It should of course be $10 adverse, as the mix variance is $132 favourable and the yield variance is $142 adverse, giving a net figure of $10 adverse. The usage variance is calculated as the actual usage compared to the standard usage for the actual output volume multiplied by the standard cost. Again, we need to perform this calculation for each material involved and then add the two variances together. So as before, we will put a table together to help us. In the first column, we re-input the actual quantities used of A and B per the data from the scenario, so 250 kilograms of A and 370 kilograms of B. Remember, this was also used in the material mix variance calculation. In the second column, we then need the standard usage for the output of 100 units, as used in the material yield variance calculation, 200 kilograms of A and 400 kilograms of B. Comparing these figures gives us a difference of 50 kilograms for A and 30 kilograms for B. We have used more of A than anticipated and less of B, so multiplying these volumes by their standard cost gives us an adverse variance of $250 for A and a favourable variance of $240 for B. The total material usage variance is therefore $10 adverse, matching that calculated by combining the mix and yield variances.